Good morning, everybody. We've got a higher trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures up 2 3/4 at 540 3/4. November soybeans up 9.5 at 1230. December Chicago wheat up 8.5 at 764.5. December Kansas City wheat up 6 3/4 at 780 3/4. December spring wheat up 7.5 at 1020.5. Sorry, guys, I sound terrible this morning. I've got some kind of head cold or something going on. But in any case, if you are listening on the podcast, leave me a rating or review if you have not already. If you're watching on YouTube, hit the like button, subscribe to this channel, help me to grow this thing. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. Check out the subscription service, guys. For $49.99 a month, I send my subscribers my morning email, which goes out every business day just before 6:30. In that email, you'll see every overnight headline that is of importance, all of the weather information that is important to you, charts, graphics, all of my grain marketing recommendations. I advise sales broken down by crop year, and by percentage. They're tracked every single day of the week. This is a monthly subscription. You can cancel it at absolutely any time. There is no other fee, no other obligation. I will not try to sell you anything else, I promise. So certainly check that out. We had some rains move over the Corn Belt over the weekend, and we've still got some on the radar here this morning. So over the weekend, I mean, a good chunk of Iowa saw 2 inches or more of rain. A good chunk of say, that northern half at least of Illinois. Southern Missouri was very wet. The northern 2/3, even a lot of the southern part of Indiana was very wet as well. So this is a deal that could certainly stall harvest activity in some areas of the country. And even some of these peripheral areas, I mean, eastern Nebraska was fairly wet. Parts of South Dakota were wet. Parts of eastern Kansas were wet. When you go into the eastern Corn Belt, Ohio, even into Pennsylvania, they were wet. Here's the radar here this morning, and we still have some rain. You've got a system sitting over northern Illinois, southern Wisconsin. You've got some sitting over parts of Indiana, Michigan, and then this kind of wide band that goes all the way up from say Mississippi through Middle Tennessee. It's raining in my neighborhood this morning. Kentucky up through Indiana. So fairly wet here. Could harvest activity be stalled a little bit? Yeah, it could be, but we're moving ahead of schedule in terms of corn and soybean harvest. The next 7 days, you're going to see a system kind of run into the plains and western Corn Belt on Wednesday. It's going to be a slow-moving system that drags across pretty much the whole country, or the whole Corn Belt at least, beginning with the eastern parts of South Dakota, Nebraska, Kansas. So the whole Corn Belt's going to see an inch of rain this week. So some areas will be stalled. I'm not overly concerned. I don't think the market is overly concerned about any sort of harvest delay. I wouldn't even call it a delay. I just say that things may stall out here for a second. There was some additional chatter regarding Chinese export demand on Friday. Now, we saw this same sort of chatter last week, early in the week, and last week the rumor mill turned out to be just incorrect, essentially. There were no flash sales reported. Flash sales, if they are to be reported, will be at 8 a.m. Central Time. Could be this morning, could be tomorrow morning. Exporters, of course, are required to report any sale of corn, soybeans, or wheat above 100,000 metric tons. They have to report it to the government by 3 p.m. Central, the day after the business has been transacted. So we could see something this morning, maybe tomorrow, if the rumor mill is correct this time around. It was not correct the last time around. Fund traders continue to lighten their net long position in the soybean market. They have been fairly aggressive sellers over the last several months. The net long in beans as of last Tuesday, according to CFTC, was only 15,000 contracts, and that position was well over 200, I believe. Back during the spring. It actually peaked out last fall. This is the lightest net long in the bean since June of 2020. Now, you look at the bean situation on paper, and the supply and demand situation domestically, at least, is loosening up. I mean, USDA was projecting for this marketing year a U.S. carryout like sub 200 million bushels, and now that number's well above 300, probably on its way to something above 400 because of the slow pace of export sales, which I have discussed at length here. Corn is quite the opposite. Funds are sticking to their guns there, still very heavily long the corn market, more than 200,000 contracts. Funds still net short SRW wheat, the spring wheat, and the HRW wheat market's kind of leading the way here, but I wouldn't be surprised if they were net long SRW here at some point, given the rally in the market. Brazil's currency continues to weaken versus the dollar. The dollar has gained about 15% versus the Brazilian real since late June. The dollar is only about 3.5% from an all-time high versus that Brazilian currency. Traders are very skeptical, currency traders. They are skeptical that the Brazilian government will be able to do anything to tame inflation there. They've got major inflation issues. There are new spending plans that the government has rolled out in Brazil that are additionally negative that Brazilian currency. They've tried some central bank intervention, couldn't get anything going there. So a strong U.S. dollar, of course, versus a weak Brazilian currency makes U.S. crops less attractive on the global market, especially when you've got these big Brazilian crops being projected, record crops being projected in both corn and soybeans for Brazil this year. Crude oil trades fresh multi-year highs. This morning, the spot month December WTI traded as high as 84.76 overnight. That's the best trade for any spot month WTI crude contract since October of 2014. Traders expect global stocks to move lower in the coming months as demand continues to improve. OPEC has no interest in a larger production increase, and they say that they're doing it because they want to see COVID kind of be reduced, or COVID impacts or risk of lockdown. They want to see all those risks reduced. What they don't want to see, what OPEC doesn't want to see, is a repeat of what we saw in spring 2020, which is when crude oil went negative. They have no interest in seeing crude oil trade negative ever again. So until COVID starts to abate a little bit, and I don't know if that ever happens, but they're not interested in increasing production. So you've got better demand because we are recovering. OPEC says, no, we're not going to pump any more oil, and you've got the result is higher crude prices and higher prices at the pump. The national average gasoline price was like $3.32 last week, which was the highest since 2014. The highest we ever got was just over $4 in 2008, but that did not last real long. Most of the other energy markets following suit there. Remember, guys, Friday is first notice day for November soybean futures. So if you have any remaining positions there, make sure you take a look. Report schedule pretty normal this week. Export inspections this morning, crop progress after the close, ethanol Wednesday, export sales Thursday morning. We had a cattle on feed report out on Friday. It was a little bit friendly. The cattle on feed number was as expected at 99. Placements was the friendly piece here, 97% versus 101 expected. Marketing's pretty much as expected at 90, was it 97 or 99? I can't read my own writing. But in any case, a little bit friendly. U.S. dollar is a little bit higher ahead of the cash open. S&P's up 4, the Dow's about flat, gold's up a little bit, silver up a little bit, bonds about flat. Crude oil is up 96 cents at 84.72 in that December WTI, very strong. Everybody have a great day today. I'll talk to you guys same time tomorrow.